So in today's video, we'll be going over 3 stocks to buy in December 2020. I always make these update videos every single month, but this month was a lot more difficult to make than all the other months. So if you guys have been investing with me and following me since March of 2020, then basically you could have bought almost anything and held until today and you guys would be up. Almost anything, unless like you were buying Hertz or you were buying Neo or all of these like meme stocks. But basically, if you were buying a solid quality company, most likely you are up in the markets. And that's what I've been doing, all right? I've been using Robinhood for a lot of my trades and everything, but today we're going to be using a different brokerage. We're going to be using TD Ameritrade. If you guys don't know what that is, basically it's like the grown-up version of Robinhood. So one last thing that I do want to say about Robinhood is that they've been having a lot of issues in 2020. Hopefully they fix a lot of the issues because I like using the platform, but basically if you're not a reliable brokerage, like what's the point of having my money in your accounts, right? So today we'll be looking at TD Ameritrade. If you guys caught my last video about HSAs, I do recommend you guys go check that video out because there's a lot of advantages to having an HSA. And I recently opened mine up, maxed it out, and right now this is my HSA account, all right? I opened my HSA with Lively and we are sitting at $7,071.76. So I'm editing the video right now, and one last thing I forgot to say is that I do believe these are still growth companies, but I don't think that they're going to double or triple in price in the next year or so. But if you do keep them, I'm going to be keeping them longer, and I do think maybe in the next 5 years they might be able to double in price or something like that. So if we take a look at my balance here, I made most of my deposits within the last month or so, and these are the positions that I bought, and I'll be going over each and every single one of them. The first, I bought one stock of Amazon, and I know I said one stock. That's because one share of Amazon costs over $3,000. I bought one stock of Google, which costs $1,800, over $108,000, and I bought 10 shares of VTI, which is an Vanguard Total Stock Market Index ETF, and I bought. Current price right now is 191 shares for each one of those. So taking a deeper dive into Amazon, like this year has been the year for Amazon in my opinion. You could say that for Tesla as well, but Amazon is like not that far behind here. With the pandemic this year, buying things online has been so convenient. I never have to step into like a supermarket or a convenience store if it's not an emergency, and I can just wait 1 or 2 days to get whatever I need. And Amazon has really helped me along that way as well. I'm pretty sure you guys are feeling the same way about Amazon right now. This year alone, I probably bought more stuff on Amazon than in the last 5 years combined. So, and I don't really see this trend slowing down anytime soon. It's just a better way and a better experience when it comes to buying regular everyday items now. And there's still a lot of growth potential, I believe, with Amazon, even if the markets are at an all-time high right now. I don't know if I mentioned this earlier, but basically, if you've been buying stuff like me since March of 2020, anything that you bought since then, and if you held until today, you would be up on your investments. Like if we take a look at my total entire portfolio here, my portfolio is sitting at $140,000. So links are going to be in the description for everything for your convenience. You guys don't have to jump around. And if you guys want some free stocks, everything's going to be down there. So my portfolio is sitting at almost $140,000 with an annual dividend income of $3,894. And if we scroll through this, you see nothing but gains here. I only have a few stocks that I'm still holding that I'm down. And right here, this is only a handful of stocks. Well, 6, so not technically not a handful. And my worst performing stock right now is Intel and ExxonMobil. So like I said earlier, if you've been buying since March, you would be doing pretty well in the markets if you just bought and held. But now the deals are getting a lot harder to find. And so for me personally, I'm looking for something that will at least hold its value and something that potentially can still grow. And that's like the combination that I'm looking for at the moment. And I think these companies that I bought, Amazon, Google, and you can't really say the same thing for VTI, but basically Amazon and Google, I believe they still have a lot of growth potential. Amazon is one of those companies where I always wanted to get in, but I always thought, the price is way too high. I'm just going to wait for it to come back down. Price is way too high. I'm going to wait for it to come back down. And bam, it's now the price is over $3,000. So for me, I just personally needed to invest a little bit more, grow my position in it, and I'm going to be dollar cost averaging into Amazon from here on out. I have a bigger position in my TD Ameritrade brokerage, but on my M1 Finance as well, I still have a decent amount in there. On my M1 Finance account, I own a fractional share on there as well. I own about 0.368 shares. So if you guys got like a lot of money, TD Ameritrade, they only do whole shares, but if you don't have that much and you guys want to buy fractional shares, you guys can buy Amazon on Robinhood or M1 Finance. So this is one of the big reasons why I want to start to invest in Amazon a little bit more and a little bit faster here, is because Amazon Pharmacy, this has been in the news recently. They just started implementing the big pharma for Amazon over the last month or so. And I think this has been in the works for a while, but I just wanted to see how it works and just introduce to you what it is. So you can sign up for Amazon Pharmacy, explore pricing options, and then you'll have your medication delivered right to your door, just like any regular Amazon package. With the pandemic thing still going on and, the vaccine still not out yet, I think this is going to be one of the biggest potential income streams for Amazon in the future. And when it comes to big pharma, they got a lot of money. That industry is jam-packed. I own companies like Pfizer as well and Johnson & Johnson. Those are big pharma companies. And I think Amazon is going to be a big player in that role in the future. Our promise to you, we believe pharmacy can be better. With us, you'll always know what to expect. Our pricing is clear, understandable. Medical information is protected. You can always speak to a pharmacist. You'll never worry about your medication. You'll never stand in line at a pharmacy. So that's one of the big reasons why I bought Amazon. And, Amazon at $3,000, like this is the only stock that this is the most expensive stock that I ever bought, or the highest price stock that I ever bought at $3,000. And I believe, yes, the market is starting to look overvalued in my opinion, but still this could potentially hold its value. And if it does drop, I'll be buying more Amazon. So let's move on to the next one. So the next company on the list is Google. And Google is another one of those companies where I just want to always get in, but the price is just starts climbing higher and higher. And you always think, I'm just going to wait for a pullback. Same situation with Amazon as well. So, I just bit the bullet and I bought one share of Google. It's not going to, it is at the high range, the 52 weeks range on the high end, but still, Google, as a YouTuber, I got to invest in the company that pays me, I believe. So when it comes to Google, you can actually buy Alphabet Class A shares or Alphabet Class C shares. And basically there's only one main difference where Google GOOGL Alphabet A class shares, you can have voting rights, and the Alphabet Class C shares, there are no voting rights. So I've heard a lot from other investors saying that the C class shares are better just because you're paying a little bit of a premium for the A class shares. And even if you do have voting rights, you're never going to really change anything with the amount of voting power that you have unless you're going to be buying like all the A class shares. So it's probably better to just get the C class shares, where that's probably the mistake that I made where I bought the A class shares. So I think that might be a better choice in my opinion, but let's jump into some of the reasons why I'm starting to invest in Google. And the main reason why is because of the YouTube ad revenues increased 30% from 3.8 billion in the third quarter of 2019. This year, including this quarter, showed how valuable Google's founding product search has been to people. So the main moneymaker right now for Google is their search. So basically, anytime that you search for anything on Google, so let's say you wanted to look up LASIK surgery here. If you typed it in, you look at LASIK surgery and you see these ads, this is how Google makes their money. So companies pay Google to put their ads up here. And look, we got 1, 2, 3, 4, We got 4 ads for that. And you can just think of all the different topics that you can have ad placements on Google, because if you're not on the first page of Google, most likely you're never going to be seen. When was the last time you went to page 10 of Google and looked for something? It was probably like 15 to 20 years ago when I did that, when I was like looking up stuff for school, if you know what I mean. And even on page 10, you're still going to see these ads here. So this is the main moneymaker when it comes to Alphabet. And now we have YouTube ad revenue. So as a YouTuber myself, I started calling myself a YouTuber after I hit 100K. And this is one of the reasons why I think Google will still has some growth potential. I believe they haven't really monetized the ad revenue from YouTube quite well. And yes, you're seeing some ads whenever you watch a YouTube video. You probably might see one ad in the beginning of this video, and one ad in the middle of this video, and one ad at the end of this video. That's typically like the normal way that they're doing it now. But we're just in the beginning process of this. They only just recently started adding this YouTube ad revenue lately. So as they get more efficient with ad placements and more brands and more companies want to place their ads on these YouTube videos, they're going to make a lot more money, right? That's one growth potential they have right there. So on top of that, I think there's going to be a big migration as well from people switching over from cable, cutting the cable plug, and just watching YouTube. There's YouTube TV now. I had this for a while. Alphabet also has YouTube TV. I've used this for a few months. I wasn't really a big fan, but I know, firsthand and personally, like I know a lot of family and friends are using YouTube TV. They've cut their cable cord already, and now exclusively they're watching all their channels and sports from this service. And I believe in the future, this has the potential to be one of the biggest money makers as well for Alphabet, including with YouTube ad revenue. So going back into TD Ameritrade here, Google right now is worth $1,819 a share today. It's on the 52-week range on the high end. So you guys have to be really cognizant of that. I don't really like buying companies at the high end of the 52-week range, but I still believe that Google will be able to hold its value even if like a correction comes. Eventually, the price would go back to this range, I believe, and I will be dollar cost averaging into Google in the future as well. And lastly, let's jump into VTI. So I was having a really difficult time making this video just because, it's not as easy like before as it was to just buy stocks and say, oh man, definitely this is undervalued, this is undervalued. It's just, I just can't say that anymore just because, basically we have returned back to the levels that we've seen pre-pandemic. And now that's why I'm purchasing VTI. I believe, buying an index is probably the best thing for a beginner to do. It was how I first started to get into investing in the stock market. So just going back to the fundamentals of investing, that's what I did. That's what I'm going to do every single time as well. If you ask me personally, like if it's better for me to invest in individual stocks or an ETF, I would say ETF 90% of the time. Just go with an ETF. All right, so let's jump into some stats here. This is Vanguard Total Stock Market Index Fund ETF shares, VTI. That's the share price up there at the top. So performance overview, 17.10% year-to-date total return. And if we look at some of the annual total return history here, the last time we saw a negative return was in 2018. Before that was in 2008, 37% basically down, and 2002, which was 21% down. But on average, if we take all of this and average it up, I think, let's look at here. The last 10 years, it's been a 14% average return. Some of the best investors in the world, aka Warren Buffett, says that he would buy an index fund. So why wouldn't I want to buy an index fund? There's also space for all those YOLO investors as well. Why can't you do both? Invest some money in the ETF and invest some money into your YOLO trades. You can do both. There's no one saying that you can't. So with that being said, For all of you guys that are just new to investing, just beware that in December of 2020, there's typically like some type of sell-off just because of tax loss harvesting, which is the selling of securities at a loss to offset capital gains tax liabilities. And this happens every single year. I'm pretty sure it's going to happen this year as well. So just be careful for anybody that's just starting to invest. You guys really have to go through the history, and this is just coming from experience. This happened last year as well, and the year before that when I was investing. And if you guys are just new, you guys probably won't know this. So if you guys want to see more videos from me just like this, don't forget to subscribe. And also go check out these videos here about dividend investing, real estate investing. Like I said, subscribe, hit that notification, give me a like on this video, and also go check me out on Instagram or my second channel, and I'll see you guys in the next video. Thanks for watching. Bye.